Like much of what we do at Kensington, we dare to be different, and today you'll be hearing from some unfamiliar names but experts in their areas, sharing their thoughts on way to grow your business and succeed within our current mortgage landscape. This morning we are looking at complex lending for the changing customer, but just before I get into the agenda of the day, I'll just run through some brief housekeeping tips. You'll have the option to submit questions throughout our session today, and my expert colleague Adam will be working behind the scenes for you on those questions. If you do have any technical issues, then please do use the same question box and we'll be on hand to help. We'll also be running some poll questions throughout the webinar today, so keep your fingers at the ready to join in on the voting. We're expected to run to around 45 minutes this morning, and your CPD certificates will reflect this. They'll be emailed out to you after today's session, so do keep an eye on your inbox. But to make sure I keep to time, let's have a look at the agenda. We've got a great lineup planned. My first guest will be Commodore, founder of Pennies to Pounds. Kia is a social media financial influencer, or finfluencer, who will be presenting to us Gen Z and the future of mortgages, highlighting the changing customer trends and behaviours within this demographic. Next up, I'll be joined by Kensington's Head of Lending Operations, Binnie, for a Q&A interview. We'll be discussing approaching complexity with confidence, and I'll be asking all about the latest highlights within the complex lending landscape. And finally, I will be back on your screens to give you the latest Kensington Mortgages business updates. So just before I welcome Kia onto screen, I'm very keen to get your input this morning, and in a few seconds you should see a poll question appear on your screen. As today is all about complex lending, I would be very interested to find out if you have already started to see a shift towards more complex lending and changing customer needs in your businesses. So hopefully you can see that poll on screen now. So are you seeing more complexity with your client circumstances? There are three options: yes, somewhat, or not yet. And I'll give you just a few seconds to answer this question before we take a look at the results. I can see that we've already had quite a lot of responses coming through, so thank you. Just a few more seconds and I will reveal the answers for you in 3, 2, 1. The poll is now closed, so thank you so much for voting. And what good numbers we can see there. So we can see 49% of you say yes, you are seeing more complexity in your day-to-day cases, 42% saying somewhat, and 9% saying not yet. So that's really interesting. I can certainly say in my role that I've seen a huge increase in queries around complex lending, from things like credit blips with customers to multiple income streams. We're certainly seeing a rise, and even the definition of a specialist customer has changed really dramatically in recent years. So thank you again for submitting your answers. Now moving on to our very first session of the day. The Gen Z demographic are a fast-growing sector of our mortgage industry. They are young adults aged between their late teens to early 30s, and some of this group is already being active in our mortgage market and will continue to be a main customer group for many brokers, especially as the years go on. Commodore from Pennies to Pounds joins us to explore Gen Z and the future of mortgages. So let me hand over to you now, Kia.
Thank you so much for that introduction, Eloise, and it's amazing to be here with all of you. I am talking today about Gen Z and the future of mortgages, talking about how their attitudes are shaping the market, because as we all know, there is a lot of talk around Gen Z, and Gen Z are really trying to get on the property ladder, but it's all about how do we reach them and how do you speak to them. So who am I? My name is Commodore, and I'm the founder of Pennies to Pounds, a financial education platform created for 18 to 35-year-olds to demystify personal finance. I did this 5 years ago, and since then we have grown an incredible audience of over 100,000 followers across the board and 22,000 podcast subscribers, specifically for Gen Z and millennials. We've been featured in a number of different publications, and it's been amazing to grow this platform. But me, myself, I have been fortunate enough to have an audience that are telling me exactly what they want. The Gen Z are really communicating with me about what they're looking for and what needs they want met, from financial institutions to the property market, tech companies, all of the above. And as well as that, I am also a Gen Z. I fit the mold just about, I just about make it, but I'm also a Gen Z. And whenever I'm having conversations with Gen Z and with financial institutions and property and banks, the big thing that comes up to me is miscommunication. And it's on both sides. So what I find is that Gen Z don't know how to communicate what they want to these big companies and corporations who are usually of an older demographic. And then on the flip side, these big corporations have no idea how to actually access the Gen Z market and speak to them in a language that they understand. And this is very prevalent in the property market. So hopefully in these next 5 to 10 minutes, I can give you a bit of an overview to give you a better insight into what Gen Z are thinking and feeling and the things that you can implement to reach them and reach a new target audience that perhaps you might find a barrier entering. Now, when it comes to property, I know that you walk into an estate agents and you'd have a look at what's on offer, whether it's in your local area or in the neighboring areas to rent or buy. And I know that because I've been with my parents to do so. You might go into your local cafe and look at what's pinned up. Gen Z aren't doing that anymore. Gen Z are turning to social media. Now, I think the biggest issue that comes from that miscommunication is because Gen Z are very different to previous generations. I know we can all say that each generation has its own difference, but I think the biggest difference is that they have grown up in the heart and the rise of social media. So they are turning to social media for everything that they do. There is a statistic that's come out and says that 74% of Gen Z are using social media like TikTok and Instagram as search engines compared to 51% using Google. Now, I'm still on the Google side, but I know that many people are turning to TikTok, especially to search for things like property. Now, I'll show an example here. This will just me searching homes to buy in London, and you can see how many searches come up. In the middle here, you will see this is what TikTok are starting to do. They are starting to position themselves as a search engine because they know Gen Z are moving to TikTok to search. So this is what will come up, like it would similar to Google. These are exactly what comes up in terms of the information that the Gen Z are getting. And there are videos there from experts who are teaching Gen Z and giving them insights as to what they're looking for in properties. And on the far right is what you'd see if you clicked on a view all. And this literally gave me a breakdown of different properties, different places that are actually listed when it comes to buying property. So this is what Gen Z are doing. They are turning to digital, they're turning to social media to actually begin their home buying journey. And a majority of it, lives online. So where you might be used to people reaching out to you via websites or giving you a call, Gen Z aren't doing that. Gen Z are tend to come to you once they've made a decision, once they have a better insight as to where they want to buy, what they want to buy, and they've done all that research online, then they'll come to you. So it's all about understanding how to target them and where to find them, and they're on social media. Second to that, a big thing is value and affordability. I mean, every generation struggles more than the previous when it comes to getting on the property ladder. However, I will say that I think Gen Z are really feeling it the most because prices are going up exponentially. Wages are not increasing at the same rate. Cost of living is going up, and it is becoming increasingly harder to get on a property ladder. So what you'll find, again, this is taken from social media, is there is this big shift towards how can we manage our money better and how can we make investments that are actually better value for money. So there's a massive trend going on at the moment called loud budgeting. Now, it is perhaps as you might think it is, and this is where Gen Z are kind of moving towards being more open and being more vocal about their budgets and what they can afford and what they can't. And this is within friendship groups and even wider down to what they're buying, whether it's cars, properties, holidays, talking about what they can actually afford and not being ashamed about what they can't. And they're really factoring in, and that really plays a part when we talk about property, because all of these things like the rising cost of living, not and even being priced out of areas that they've grown up in have a massive effect. So the way that you'll see it translate is that this generation are actually looking to make investments that offer long-term value. So where you might find people who would come to you and want to buy a house and this is their first home, they're looking to buy another, Gen Z are looking to make deeper roots, because they know that this investment is going to have to last them for a longer period of time, because their money just doesn't stretch as far anymore. So they are looking as far as things like energy efficient homes and locations that will offer them good resale value when they do come to sell in the future. So all of these things factor into what Gen Z are actually looking for when they're picking up and looking to buy a property. And then third to that, unsurprisingly, is the desire for flexibility. Now, we've seen everywhere there has been a massive push to get people back into the office. And from all of my conversations, Gen Z are very much so working from home, building their own home office space, and wanting that flexibility for themselves and their lives. And this also does factor into what they're looking for when they're looking for properties. So there is a big rise in remote working. A lot of young people want the flexibility to be able to create home spaces, to be able to create home offices, and give them the ability to move around freely, whether it's move around within the country or abroad. This is a massive focus for a lot of Gen Zers who I know have taken up and been able to buy properties that might be further out from their home, wherever they've been brought up, but to be able to create spaces within their environment to work from. And then another part is this loan flexibility. And I think this has become even more apparent in this generation, because there is a lot more flexibility and fluidity when it comes to Gen Z and their career and lifestyle changes. We see a lot more Gen Zers who will kind of be at a job for a couple of years and then move to something else to be able to, be able to get promotion or to be able to explore a new area. And they are seeking for loans and mortgages that afford them that flexibility without actually offering a financial penalty. So they are looking for that. So it's something to be aware of. If you do come across someone who comes to you, someone in that Gen Z category, this is also something that is at the top of their minds. Flexibility with how they work, and also in terms of loans and mortgages and repayments. So just to kind of round that all off there is a massive shift towards this digital first experience. If you are a mortgage broker or you're someone who is trying to reach Gen Z, you need to reach them where they're at, and that is online. Now, I'm not saying to everyone on this call that you need to jump on TikTok and start dancing. That is not what TikTok's about anymore, and that's certainly not the content that we create on Pennies and Pounds. But it is considering, how do I reach the new Gen Z audience? You don't have to do it yourself. Maybe it is bringing in someone as part of your company. Maybe it is partnering with other content creators, whether that's property, lifestyle, financial, to create content. Us at Pennies and Pounds, we worked with a number of different property developers to create content around their homes to showcase it to Gen Z. So maybe it is figuring out a way that you can do that to reach a Gen Z audience. It is also then considering affordability and long-term value, because this is going to be essential if you want to attract Gen Z and being able to build that relationship with the Gen Z market. Sustainability and ethical considerations, something that I didn't get to touch on, but also a very big part when it comes to Gen Z. They're becoming more aware and more conscious of where their money's going and what they're putting their money into. So that really does have a big factor in their home buying decision. And then lastly, as I mentioned, having that flexibility is going to be imperative. So if you're able to consider that and remember the rise in remote working and also what they're looking for in terms of repayments, then that will also help you when actually communicating to a Gen Z audience. Hopefully this has been a really good breakdown to you all. I will be chatting with Eloise in a second, talking about a few more questions that may be on your minds. And yeah, hopefully this has helped you to connect with a Gen Z audience that perhaps you might have found a bit of difficulty reaching previously.
Thank you, Kia. That was excellent and so interesting to learn from an expert on this demographic. Thank you for joining us.
Thank you.
Absolutely, as you mentioned, there are a few questions that I've got. So if you don't mind, I'll jump into the first one.
Yes.
Thank you. So the first one, do you think that Gen Z are aware of the support and advice that mortgage brokers can provide? And if not, how can a mortgage broker raise this kind of awareness within that Gen Z demographic?
If I'm honest with you, Gen Z are very ahead when it comes to social media and all of this tech first things. But it's interesting, when I have conversations with Gen Z and we talk about financial products, they are very far behind. And I think that skepticism and all of that comes from perhaps these institutions not being able to speak to Gen Z. So I say this to say that I don't think Gen Z are as aware of what mortgage brokers do and the benefits that they can bring, because a lot of people that I speak to, when they're looking for mortgage products, they go with their banks. They go with who they bank with, or they go with who their parents banked with, because they feel like there's a sense of security there. And I think there is a lot more that can be done for mortgage brokers to kind of let Gen Z know what they do and the benefits that they bring. And if I was saying what you could do to reach them, I think it is more of what I just said, of reaching them where they're at. You know, if you are someone who isn't online, but you know that Gen Z are, unfortunately you have to find a way to bridge that gap. It might not be you who goes online, but it might be bringing someone else on. It might be partnering with someone who's got a big audience that you can now just tap into without doing anything. If you are a great speaker, go into podcasts, which are for Gen Z, and talking to them that way. I think with Gen Z, you have to build up a rapport, and they have to feel like they can trust you, because money doesn't go as far as it used to anymore, and Gen Z are feeling that. So they really have to trust where they're putting their money into and who they're trusting to actually give them that help.
That's excellent. Thank you, Kia. I suppose that probably aligns with what you were discussing in the presentation about that shift towards virtual home tours and properties and things like that. Everything's moving on online, and absolutely meeting them where they're at is fantastic advice. You also mentioned within your presentation about sustainability and ethics, and that becoming increasingly important to this cohort. We've had a question that's actually come through, which is, does this mean the demographic are looking for sustainable and ethic mortgage providers or a green home, or are they looking for their mortgage brokers to hold these credentials?
That's a really good question. And yes, Gen Z are more aware of sustainability, ethics, because they are the generation who are kind of feeling that now. They're feeling, you know, whether it's global warming, they're feeling all of these things. So they're being more conscious of where they're putting their money to. I would say to everyone watching, you don't have to sit there and have credentials. I don't think they're necessarily looking for that. I think this sustainability element factors into what they're looking for in terms of homes. So some people are looking for sustainable lenders, but I don't think that's as big as looking for green homes. That is the big thing that I'm hearing when I'm talking to people. It is, how is it made? How is it made? What are the things that are part of the house that makes it green, that helps the environment as opposed to harms it? How was it built? What are the materials? Those are the kind of things that Gen Z are actually asking. So it's kind of more being aware that some of your Gen Z customers may be asking these questions and being prepared for that and tailoring it to them. But I don't think you necessarily need to have the credential. They're not necessarily looking for you to be an expert in green living. They just want to know, if this is something that I'm interested in, could you help me find the right properties that fit my criteria?
Yeah, and it's probably the cost implication as well that comes with a green property that's attractive to a Gen Z customer as well. So no, that's fantastic. And I imagine as time goes on, there'll be only more and more of this importance, and more and more potential customers moving into that space as well.
Absolutely, I agree.
I suppose my last question for you then, if I may, how do you think that this generation want to engage with a broker? What can a broker be thinking about doing? What does that relationship look like? What do they want to have from the broker?
The biggest thing is that rapport element. So property is arguably going to be the biggest purchase that many of us are going to make in our lifetime, especially Gen Z, and they feel that pinch in their pocket. And it's back to what I said a bit earlier. They want to feel that they can trust the people who are part of that process and part of the money exchange. So to any brokers out there who want to build up that rapport, social media, you know, I'm a broken record, that is one thing. But I think another thing that you can do, and another thing that we're seeing a rise of in Gen Z, is this rise of community. So I think you can figure out ways to put together events, whether it's virtual, like one of these, or in person, to bring together Gen Z, people who have never heard of mortgage brokers, who may never have heard of yourself or your company, and tell them about what you do, and not in a sales pitchy way, because Gen Z don't want to be sold to. Everyone sells to them all the time, right? But the problem is no one talks to them as though, you know, they are a regular customer and in a way that they can understand. So if it were me, what I would say is put together events, virtual, in person, and actually educate them. So have, you know, a few members of your team, and also have external speakers who can come and educate them. Now they see you as more than just, you're coming to sell me on this because you make money from, you know, helping me get a property. They see you as someone who's a source of knowledge, someone that they can trust, and someone that they can rely on if they are feeling a bit nervous in this process, if they do have any questions, they can come to you. And I think I've seen a lot of value from, not many mortgage brokers are doing this right now, but from the few that I have seen do this, they have been able to grow a massive Gen Z audience. And I think that there is still a lot of scope for mortgage brokers to kind of step in there and be able to bridge that gap between the two generations.
I love that. I think that's fantastic. Kia, thank you. Thank you so much for joining this morning. Really appreciate you coming on.
Thank you so much for having me.
Brilliant to have you on, Kia. We conducted a poll last week on LinkedIn, and we asked you what the biggest challenge facing Gen Z on their home ownership journey is. So firstly, thank you to those of you who took part. And secondly, I wanted to reveal the results. The poll revealed that 61% of you thought that saving for a deposit was the #1 challenge, followed by 34% of you believing that it was actually affordability, whilst 2% of you thought it was due to a lack of available properties, and actually 3% of you thought it was something else entirely. We know that there are extreme challenges out there for first-time buyers, and what's extremely reassuring is the difference that a mortgage advisor can make in this sector. In a recent research that's been released by Dutton Gregory, almost 70% of first-time buyers said financial advice would be their top ask to make the home buying process easier, versus things like government grants, property search assistance, moving assistance, legal guidance. The list goes on. The #1 thing, again highlighting the importance of brokers in this sector. We know this customer group will, and Really Moving released some figures last month showing that first-time buyers accounted for 64% of homeowner activity in December of last year and 63% in January of this year. It's likely caused by the stamp duty threshold reverting back to 300,000 on the 1st of April. However, Zoopla suggested that this shouldn't have a dramatic impact on overall activity, as in fact 60% of first-time buyers will still pay no stamp duty in their areas. The drive and desire to get on the ladder is still strong in the UK, and over a fifth of renters want to buy a home, having seen costs of renting rapidly rise over the last 2 years. Renters buying homes will be a key driving force for the first-time buyer market, and Zoopla predicts that in fact this year it will be the largest buyer group once again. So thank you again to those of you that took part in the LinkedIn poll. If you want to take part in any of our other polls on LinkedIn, please do head over to our LinkedIn Kensington Mortgages webpage and click follow. So next up, moving on to our next area of today, we are joined by Graham Binnie, Head of Lending Operations at Kensington Mortgages. Graham joined us only a few months ago, but he has over 17 years experience in the financial services sector. I'm very much looking forward to getting his insights and the underwriter voice this morning. So without further ado, Graham, if you'd like to join me on screen. Welcome, Graham. Thank you for joining me. Let's dive straight into the questions. So our webinar today is all about complex lending and the changing customer. So what is complex lending? What does it mean to you?
Oh, good question, Eloise. I guess as the audience will know, complex lending kind of typically refers to cases that don't fit the conventional high street. They could include that could include borrowers with multiple income streams, or they might have had a credit bump in the road, or they may just have something slightly more non-standard that they need our help with. And then on the buy-to-let side, I guess it's more in the limited company space where borrowers are tending to favour limited company borrowing rather than traditional buy-to-let, for tax purposes. And I think for Kensington, rising complexity presents a massive opportunity, right? We're seeing more and more customers whose needs are non-standard, and we're desperate to help them. So
fantastic, thank you, Graham. I mean, absolutely, we know this area of the market is growing, and since the pandemic, which was really a main catalyst for a lot of change in our sector, we then started to have to combat the rising cost of living. So it's very understandable that many customers now fall outside of that high street mould, as you say.
It's been a rough and
I suppose
tumble
on
few
that,
years, hasn't it?
well, absolutely. I suppose on that, there's kind of probably been a lot of trends that we've seen both across the market and also here at Kensington. Can you tell us a little bit about that?
Yeah, sure. I'll start with Kensington actually, Eloise, where we've seen a massive uplift in application volume, and I think that, to your point, is representative of ever-changing customer needs, and I think growing broker awareness of how lenders like ourselves can service particular segments of the market. We've seen a significant rise in buy-to-let, as I was saying earlier. I think the main catalyst for that for us as a business has been the mega successful launch of our buy-to-let prime proposition back in October. I think more widely, despite some noise about buy-to-let, we're actually seeing a lot of borrowers moving from a personal buy-to-let to a limited company buy-to-let, and that's reflected in the mix of business that's coming into my team, but also the inquiries we're seeing through the likes of the broker support desk. Yeah, so I would say that's the main things we're seeing. Outside of buy-to-let, I guess, Eloise, residential performance remains strong, and I think that is just representative of the ever-changing customer demand. We're seeing more side hustles, we're seeing more entrepreneurialism more generally, and I think we're incredibly lucky to be able to help people who are a bit different and whose mortgage needs reflect that.
Absolutely, thank you, Graham. And I suppose on that then as well, you and your team specialise in being specialist, and there's hundreds of customers that you guys help on a daily basis. Are there any kind of real life examples that can demonstrate those trends, and talk to us a little bit about that?
I think this is my favourite question that I ever get asked, Eloise. I think bringing to life where we've specifically helped a real person reinforces the value that we can bring. Sometimes you can get lost in big numbers and the number of cases that you process and service levels and all these things that are really important, but remembering that there's a person behind the product is at times really humbling. And I think the case study I would bring to life, Eloise, was a nurse actually, so key worker and eligible for our Heroes range, going through I guess a really unfortunate set of personal circumstances, so separating from her partner, 3 young kids, obviously working in the NHS with shift patterns and allowances and stuff. Her income fluctuated, and we were able to overlook some bumps in the road from a credit perspective, maximize her income and therefore her borrowing potential. We were able to do a transfer of equity, which meant that this particular individual could stay in her family home with the safety and security and reassurance that brings. We got a fantastic review from the broker that we worked in partnership with, and that's very much how both me and the team see our relationship with the broker community. It's a partnership, and I guess that was reflected in a 5-star Trustpilot review and a brilliant story to share with the likes of the audience today. So
No,
I'm really proud of that one.
Absolutely, and rightly so. I think it's fantastic to hear those kind of case examples. Thank you, Graham, and probably very welcome to the brokers that are listening today to hear about how underwriters perceive that kind of partnership between lender and broker. And I suppose for those brokers that are listening today who are from across the UK, what would be kind of the top underwriting tip for them that you would want to give them for helping them place those complex cases?
Yeah, another good question. I think first and foremost, you know, to build on the relationship point, I think it's build a really strong relationship with your BDMs. You know, we have an amazing team of BDMs, the length and breadth of the country. They know the product, they know the policy inside out. And I think having them on board and their support throughout the case, you know, in partnership is really, really crucial. And I think we're developing that consultative approach from an underwriting point of view as well. You know, we try to pick up the phone wherever we can to, you know, build that relationship with the broker and make sure that we're, you know, discussing requirements and doing everything we can to say yes to help the customer. So I think that's my first step. We don't exist as a lender if we don't work really, really closely with brokers, and therefore, you know, I think that relationship is key. And I think probably a bit of an ask from me, actually, from an underwriting point of view, is just really, really thoughtfully packaging a case. You know, so we tend to start to assess a case within a couple of days. And the biggest barrier to getting that turned around quickly is where we have to come back and ask for multiple bits of supporting information. And ultimately, you know, the better the quality of the packaging of the case, the more chance we have to turn around an offer quickly, which gives you and your customer the reassurance that they're going to be able to get the mortgage, and allows, I guess, for the broker community the chance to move on and help your next client. So I think twofold, Eloise: great relationship with your BDM, use them as a sounding board, and when you do send a case in, try and give us all the documentation up front that allows us to assess the case quickly.
Absolutely, I couldn't agree more, Graham. Thank you for that. And I suppose it comes back to that partnership piece again, us wanting to work alongside, support our brokers, and ask them to support us with that packaging piece as well. So really appreciate that. Thank you so much for your time today. I'm afraid it's all we've got time for, but thank you so much for jumping on and having a conversation with us.
You're welcome. Thank you.
I really love the case study that Graham gave us there. In fact, there's actually another one that I'd like to share with you. A joint application, young couple, they were both director level, so earning a good salary. However, they had high levels of debt, specifically 20 credit cards and 7 loans. They were looking for 90% LTV. It was on a 3-bed detached listed building in the southwest of the country, so a number of different hurdles there, but we worked seamlessly with the broker and offered the client a 90% LTV debt consolidation mortgage on a 5-year fixed deal, which meant the broker saved their customer over £6,000 per month. A great USP of Kensington is that we don't have a debt to income ratio, and we can support with debt consolidation cases up to this high LTV. That £6,000 a month saving really highlights the Kensington difference, but actually the power of partnership between broker and lender, which feels very appropriate after Graham's comments. We know complexity is increasing in our marketplace, and in just a moment you should see another poll appear on your screen asking you what type of complexity is the fastest growing within your business. Is this this kind of a poll question is multiple choice this time, so you can select more than one if you've seen multiple areas. So is the fastest growing complexity area, is it credit blips? I know we mentioned in that interview with Graham just there that sadly we are seeing more and more customers falling into this sector. Or is it landlords? Are you seeing more limited company purchases for landlords? Is it affordability? Or is it perhaps a customer with complex income or variable income, either multiple income streams, a side hustle, or a variable contract worker? I'll give you just 2 more seconds to select all of the answers that apply where you have seen the biggest growth, and we can then reveal the answers in 3, 2, 1. Thank you. The poll has now closed. Fantastic. Okay, so we can see that 64% have said credit blips is the fastest growing area, which again makes sense based on the last few years that we've been having as an industry. Buy-to-let limited companies, again, really quite strong numbers at 35%, affordability at 59%, and multiple variable income streams at 43%. So quite big numbers across all there, and it's fantastic to see. I would definitely say if you've got any of these areas that are quickly growing within your businesses, to reach out to your Kensington BDM to find out how we can help you say yes to more of your customers. In fact, after the webinar today, there will be a survey which you can complete, and you can ask to reach out to your Kensington BDM, and we'll get in touch with them for you and connect you if you don't know them already. But next up in our webinar today, we've got the Kensington Business Update. So Kensington Mortgages has had a fantastic start to the year. We've really started the year with a bang. We've had fantastic support from you, our valued intermediary partners. So firstly, a huge thank you from all of us here at Kensington for all of your support. We've also welcomed our new CEO, Alison Buckley. Ali has been with Kensington for over 9 years and has a wealth of experience in the financial services sector, and we are very excited to continue to grow under her lead. We've also welcomed a new commercial director, and we are still recruiting our underwriting team. So we aim to do this to prioritise maintaining our excellent service levels to each and every one of you listening today. As Graham mentioned, our underwriters are not sat in ivory towers. They are on hand to help you and your customers. By submitting a case with Kensington, you have direct access to us, and your underwriters will call you each step of the way, even to let you know that the case has gone straight through to offer. Working in partnership and with our brokers is absolutely key to Kensington. We've covered quite a lot of complexity today, and as a reminder, I wanted to highlight some of the ways we work well in this sector. Graham mentioned a great case study which highlighted our Heroes mortgage range, and this product range was created just before the pandemic. It offers up to 5 times income for key workers, including emergency services staff, so police officers, firefighters. It includes NHS staff, including paramedics and clinicians, armed forces personnel, teachers and lecturers. We can use up to 100% of variable income, and as Graham mentioned, if you imagine a nurse's payslip, it's got shift pay, bank work, overtime galore. We can use 100% of this up to 5 times income. And this product is also available on a joint application basis. So let's say I was married to as it's my imagination, I'll be married to a firefighter. My firefighting partner and I apply for a mortgage together, and we would both benefit from that up to 5 times income, that affordability boost. We also talked a little bit today about first-time buyers. And as Kensington don't credit score, we are often helping those who may have a thin credit history or have experienced a blip due to a lack of financial education. We also see quite a lot of this demographic looking for our affordability boosting products like our Heroes range, but could also include our Professionals range or our high earners criteria. So there's lots of ways you can get an affordability boost with Kensington. For those with complex or variable income types, we are here to help too, from contract workers to using the latest year's figures for self-employed applicants, even if they only have 1 year's trading history. We absolutely support those who have a less than perfect credit history, from missed payments to unsatisfied defaults to even someone with an active debt management plan. We are keen to support you and your customers every step of the way when it comes to complexity. So reach out to your Kensington BDM to find out more. So that's it from me. I want to say a huge thank you to all of our guests for joining me today. I hope all of you listening have found it as interesting and informative as I have. When you exit the webinar today, you'll be presented with that short survey where you can let me know what you'd like to hear about next. Like today's webinar, this has been created on the back of your feedback, so it really does go a long way. And absolutely, like I mentioned, you can select to reach out to your Kensington BDM via that survey, and we can put you in touch. On your screen, you'll also see the LinkedIn handle where you can follow us to get the latest webinar and product news. The webinar today has been recorded, so if you've missed any moments or had to jump out, or even if you wanted to share it with colleagues, we'll make it available to you later on today, along with your CPD certificates. So that will be in an email out to you, so keep an eye on your inbox. But mainly, thank you all for listening and taking time out of your morning. It's been fantastic to engage with you, so thank you all for taking part in the polls, and I hope to see you at our next webinar. I will now play you out with our complex lending video, so take care and speak soon.